weekly market recap of every trade I went through, every trade I took in, the missed trades, the losses, the lessons, and improvements that we can have from this week and on to the next week, and everything that, right? Want to take this week's, even the missed trade, we want to journal it and so we can catch it next time. And let's go straight into it, right? So before we start off, my bias was incorrect from Monday to Tuesday, and Wednesday is when I knew my bias was overall bearish. And why was my bias incorrect? We had a daily range, market pressure at a high and pressure low, right? During this time, I did not see the daily range during that time, so it's my fault. I thought we're going from this IRL to this ERL because this IRL got reversed. We're going to the high, but I forgot that there was a daily range. This daily range was to the downside, right? To the downside all the way down here. Because market pressure at a high, pressure at a low, the weekly shift in liquidity to the downside. Although on the weekly time frame, we go from a weekly ERL to IRL, but there's a shift in liquidity, right? And as well on the weekly, there was a key level down here, right below the CRT. So the weekly objective goal was to go to the weekly CRT low. So that's why I was looking for longs, but I have my bias incorrect because I did not see the daily range until end of the Tuesday, right? So Monday, my bias was bullish. My bias was already closed, right? But I never had a setup on Monday. Monday never priced out the CRT high, which I was looking at to trade. Market never priced it out, so I never took a trade. And Monday, I was looking for a long opportunity here, right? Monday right over here. Candle, 8 a.m. candle. I was looking to long this market, disrespected my candle, so I was never looking for any more setups. I was done, right? The 4-hour CRT never happened, so I was looking for a near continuation there. It never happened, right? So Tuesday, I was looking for another long opportunity, but I was wondering like why. I think I got my bias incorrect, right? Because Monday, I was like, I may change my bias tomorrow if this Monday candle, because there was a daily CRT, right? There was a daily CRT that got respected. How come? Because before the daily candle closed, there was a model number 1 confirmation, and this would be considered as a total body soup. So the market, in this case, did what? Respected it. SMT happened with the call it repair. GU souped it out, while EU did not. But eventually, SMT happened to the downside right over here, right? And so I had my bias incorrect. But Tuesday is when I set up when I had my setup to the downside. And Tuesday I did not know, still did not know if I should be looking for a bearish or bullish, right? So after Tuesday ended, I was okay, I'm looking for bearishness because now on end of the Tuesday, I found out that okay, there's a daily range here. Market went from an ERL to IRL, right? On a daily time frame, if you go daily time frame, right? You guys know once the premium resistance gets met, our drawn liquidity becomes the daily range high or low. In this case, the sense that the daily range is bearish. How do we know it's bearish? Because we have a narrative. On the weekly, our short-term drawn liquidity is down here. On a daily, as you guys know, there's a short-term and a long-term, right? So daily we go from ERL, right, to IRL. Why do we disregard this IRL right over here? Because there's a daily range, and this daily range is in the premium section, right? Because in the premium you want to sell, right? So this fair value gap you would disregard as a whole fair value gap, right? I was looking for a long here to this, and eventually this got tapped, and you could see I eventually found out the daily range. We had a daily CRT. I know the daily CRT was gonna get respected because I saw the confirmation happen on. I saw the confirmation happen on Monday before the candle closed of the daily candle. Okay, this should be clearly a bearishness, right? We should clearly see a bearish movement happen here. So I was looking to short, right? And on Tuesday is when I had my setup. Since Tuesday, I did not know my bias. I did not know my bias still until end of the Tuesday, right? So Tuesday is when I had my bias. Let's go over our missed trade here, right? We had a New York reversal profile 2, 1 a.m. accumulation, 5 a.m. New York reversal profile 1, 5 a.m. 1 a.m. accumulation, 5 a.m. manipulation, and 9 a.m. expansion. In this case, the 5 a.m. is accumulation and the expansion, right? Our drawn liquidity was first of all Let me get 50 and get the candle. Our first round liquidity was let's see if this daily range is what that shit is called. Our first round liquidity on this with the 50% mark, the CRT low, and throughout this week, I as well back to on Thursday to see if I could hold my take profit longer, right? Be more calculated, and eventually found I could definitely do that if I have the right narrative, I have the right drone liquidity, everything is correct. I could potentially hold my trade for a longer, right? And the trade from the start of it offered us a 2 RR so that we're all good or all green, right? So now we could have hold all of this for a profit, right? Now, the scale down to 15-minute time frame. 15-minute, this is a missed trade, by the way, but we still have to journal it because a missed trade is still a journal so we can catch it next time. And this high was the one that helped it push out this legit high right over here. This was legit high. Market pushed it out, and the same candle pushed down. Why? So this auto block is still valid because we have a bullish candle, and these are a bunch of consecutive bearish candles, right? So it's still valid. So once the market closed below the whole body, I used the body. I did not put my sell stop over here. Why would I not put my sell stop right above the order block? Because this is the actual stop loss placement, right? Why? Swing high, right? Let's see. The middle candle is above this other candle, right? And this other candle, we don't know if it doesn't have to close it. It doesn't have to go wick above it, right? It can't wick above it as long as it closes below it. It's still a swing high. So stop loss would be a swing high. Stop loss would be a couple ticks above this to cover for spread. As you guys know, my rule says I have to account for market volatility, so I must adjust my stop loss by 0.3 ticks to cover spread. As you guys know, we are most of us are funny traders, right? Most of us are challenge traders. We trade prop firms. That means that there's spread. There's a huge amount of spread, right? So stop loss would be here. And in my eyes, I would see it as a loss. Yes, it did not price it out, but the spread is going to be real high, right? The spreads during the specific time, 6 a.m. is a high time of a spread because there's no volume in the market, right? So spreads are higher. There'll be a high chance of me getting stopped out on this. Very high chance, by the way. But let's just act like it did not get stopped out. But let's also act like it got stopped out, right? Because we can never have a 100% win rate. And this spreads are like 0.4 ticks, right? If my stop loss is at right here, which is at what's the pip stop loss on this? It's 10.12, and to the entry right over here is 9.8. It's high chance of a stop loss here, right? Spreads are somewhat high as well, right? In the market, it's like a 1 pip stop, 1 pip, or like 0.4 ticks or 0.6 ticks of a spread, right? So that is a lot, right? That could potentially stop us out, right? But let's act like it did not get stopped out, right? So our take profit one got hit. We've done some partials. Take P2 got hit. Do more partials. Now we're holding this from all the way over here to the 50% mark and to draw no kitty here. Why are we doing this? Because we have a narrative to the downside. So if our bias has a narrative, we could hold the trade for a longer period of time. And previously, when we did this, we hold our trade for a longer time. We get stopped out. Why? Because our narrative wasn't that strong. In this case, our narrative was very strong. We had a S&T supporting us. Market did not want to press out any higher, right? So you can see right over here that high looks like it did not stop us out in trading view, but the spread might have, right? It's cool. Losses are part of the process, right? Losses are part of the business expense. Losses are part of the is a inevitable thing, right? They'll always occur. Nobody has a 100% win rate. Nobody has ever not lost, right? Everybody has faced losses. Me, everybody, right? And that was the trade of the week. That's the only trade I had, which happened at what time? At 5 a.m. I had my entry at 5:15 a.m. I could have not entered that trade. I woke up at 6 a.m. So that's why in New York session, I was like, this looks like to be a New York reversal to me to the downside. And I'm looking for a New York reversal back to the upside, right? It wouldn't make sense to me. Like that's why it confused me a little bit, right? And over here, it never offered a setup. You can see market went down, disrespected our candle right over here. It never offered us our entry. Also went down, right? and which, let me see if I could check an example here on Tuesday, which market never offered a setup here, which was this scan right here at 10 a.m. Disrespected our model one. We're looking for a 15-minute CISD. 15-minute CISD never was there, right? This is not a CISD. How come? Because this candle is pushing it out, right? So this is the candle. This is not a CISD, but which never got closed a little above, so there was no confirmation of a reversal. But throughout the whole week, from there here to all the way to Friday, no setups. NFP hit our strong liquidity because we are correct, right? You have the higher def and bias with you. You're going to be correct as well. We had a daily CRT, so drawn liquidity. So for our short-term drawn liquidity was down here. We're going from a daily IRL, premium IRL to ERL. We're going from the premium area got tapped, and the dealing range is the bearish dealing range. Our drawn liquidity is going to be down here. You can see how the CRT as well, drawn liquidity to down right over here. And you can see how three things are all sort of same area. So it would have made sense for us to go down here, right? But yeah. And on Wednesday is when I found out, okay, there's going to be a classic expansion profile 2. Monday, high of the week. Tuesday, continuation. Wednesday, continuation. Thursday, continuation. And Friday, Thursday probably hitting the drawn liquidity. But in this case, Thursday would have not hit it because Thursday, the day before high magic news. So Friday hits the drawn liquidity and just chills off, right? You can see it's a drawn liquidity. And yeah, this is the only trade we had. It would have been a high likelihood of a loss because the spread would have taken us out. But if you go without any spread, would have not had a loss here. And what are the improvements on this, right? Well, what could we take from this week to our next week? We could do our analyzation better. We could look at daily range on a daily time frame. We could be like, okay, what do we have in a daily time? Do we have a daily range here? What do I see in daily range, right? Why should I pick this IRL or why should I pick this IRL, right? And eventually you're gonna have to find out why should we pick either of these, right? In this case, we have to pick out this IRL because there's a daily range. This daily range is a premium, but this one's a discount, right? As you guys know, you're trading in a bullish. They just say there's two bullish, IRL, right? As market goes down, retraces to one of them. Which one do you think would retrace to, right? It depends if there's a daily range. If there's a daily range right over here on those IRLs, and there's a discounted area, you're gonna go to the discount IRL, right? If there's no daily range, you're gonna go to the first fair value gap and push it back up, right? And that's how you know to pick the right IRL. In this case, there's a daily range, and this is our IRL to ERL, right? So you have all this context to the downside. So that's why I would have held this trade for a long to down here, right? And yeah, and what else could we improve from this week on is we could set up a larger amount of take profit if we have enough stronger narrative, right? Because if we have a strong narrative to our trade, right, we could set up a longer take profit, meaning a larger take profit. So this, you can see the take profit is kind of wide all down here, right? If we have enough narrative, if we have enough context, and we go into higher TIF and draw liquidity, if we're doing all of that, we could potentially hold our trade for a longer position for a day or two. This trade would have taken us 1 day, 2 day. It would have taken us 3 days to hit our drawn liquidity, right? So have a calculated take profit and set up a take profit longer, right? If we have a context narrative to it, right? And yeah, I've backlisted the calculated long take profit, which is my take profit are wide, right? They go, they're not too close from each other, right? And some of the chart might hold it for a longer time. I backlisted it as well. And some days I have to depend on the days as well. What day am I in, right? I'm on Tuesday. Will the market go all over here? Will the market go all over here until Friday? Yes or no? If yes, because we have 3 days to hit take profit. We're on Wednesday and Friday and Thursday is like a Friday and Thursday is no news, and Thursday is a holiday. Okay, no, we're probably not gonna hit the drawn location. So let me change my drawn location to down here and just be more realistic, right? So set a realistic take profit and go based sort of the time as well, because time is important. And this is my weekly market recap. And what else can we get from this week is the 5 a.m. trade. I would have not got this trade because I woke up at 6 a.m., right? I would have not caught that trade. But all we can improve on is look for daily range in the daily time frame, look for IRL, ERL to the daily time frame as well. Have better analyzing, right? Analyze better. That's what I could improve on, because for 2 days our bias was incorrect. I mean, only one day, but still, right? 2 days are of our bias being incorrect, and that's that. What else can we improve on is accepting losses. And some people would have actually faced loss in here. How would have you faced a loss here? Because you technically spread would have taken you out, right? Some people could put a stop loss a little bit wider. Okay, you've saved yourself, right? Which is a good thing, right? But losses are part of the game. Losses are part of the process. Even nobody has a higher win rate, right? Let's just say my previous trade was a loss, right? Because I made a mistake on that trade and I had a loss, right? So let's just say I take my next trade and I believe like, oh, I should definitely win this trade because this trade has all my criteria. He's meeting all my criteria, right? I'm gonna go for the take profit. I'm gonna put it like this, and eventually, I set up a realistic that is gonna hit my take profit. No, right? I should accept losses. I should that if that trade goes in a loss, that was a beautiful, wonderful loss. If it goes in a win, okay, it's a beautiful trade because that trade I follow all my rules, right? If I go in a trade, I follow all my rules. Even let's just say I face 4 losses in a row, and this other trade is a beautiful trade, right? Let's just say it looks the best trade. I have followed all my rules. I have every country I need to enter the trade. I have all my protocols to get in a trade. I enter and I get stop loss, right? That trade should not be like, oh, it's definitely gonna hit take profit because I have all my criteria. I've built up so much narrative, right? Even the highest narrative could possibly hit the stop loss, right? Even the lowest probably of a setup could hit TP, right? So that you want to accept that, right? If that beautiful trade, let's just say I follow all my protocols, I take that trade, it goes on a loss. It was a wonderful loss, right? Because my last 4 trades, let's just say all of them were losses, right? And my last 4 trades are not losses, right? I'm up 7.5 RR, right? My last 7 trades are not losses, right? But let's just say ER, right? It is. Right? Let's just say it is a four losing streak, right? And I go on a trade, as I've already said it before, looks like the best, trade. I'm hyped. I'm gonna make all my profits back. This trade is giving me a 19 RR. I'm gonna make all my profits back, right? Plus gains. If I set up that expectation, I will, or you will, or everybody in general will fail as a trader because that will lead up to bad habits. That is going to destroy you in the long term. Why? Why would it destroy you in the long term? Simply because of setting expectations like, oh, I'm gonna make money. You should set expectations that, okay, another loss, right? If you set up expectations, it's gonna be all good. Yes, it's gonna be gonna hit like profit. That's gonna take away the enjoyment, right? If you set the expectation that it's probably gonna go on a loss, another 5 losing streak, right? Another loss in his TP could be a little bit more happier, right? More satisfied. So when you're on a losing streak and you are losing a lot, right? And you get a perfect setup, don't expect that setup to hit like profit. Expect to hit stop loss because that would give you even more of a emotion, right? It would just make you even more emotional and make you ruin you even more, right? So even with the best setup, still expect stop loss. Simple as that. Because let's just say that trade will go on a loss. You expect a loss, right? You expect a loss. You're probably gonna go on a loss, right? So you go based on our probabilities because the lowest probability setup could hit like profit. The highest probability setup, like you say, all my protocols are high probability, right? Is stop because the way I enter are all based out of high probability entries, right? This trade right here is a high probability entry, right? They say I have all of that and I go in a loss, right? That will happen, right? Because the lowest probability of a setup will probably hit TP, but higher chance of it hitting stop loss. But it could definitely hit TP, right? The highest probably has a higher chance of hitting take profit, but could still hit stop loss. It's not 100% win rate, right? So please, even if you're doing this, expect to lose, right? If you have the best protocols, expect to lose. Losses are inevitable. Accept the risks that you put on a table. Accept the losses as inevitable. Accept the losses as a business expense, as you will face losses. Thank you for watching. This is the improvement you can make, and as well as as well as everybody else. Thank you for watching. Join our Discord. Like, subscribe, comment, share. I'll see you guys later. And yeah, peace out.